Hey guys, AKIL'S here. Welcome back to another Weekend Trading Edge video, your weekly look around the market, showing you the best opportunities that are on my radar for the week ahead. Let's hop in today as I have a few interesting opportunities to take a look at. We're going to start here on the pound yen on the daily chart. You can see the pound yen has been in a little bit of a mess to end last week. You see this really kind of clump of consolidation, which looks really sloppy until we dive into it and break things up a bit. So the first thing that we want to recognize is, or the first question we want to ask ourselves is, where is price action currently trading? If I take my favorite tool here, the horizontal line tool, and just put a line right at the bottom of where we tested and really at the lowest close as well, we can look left, structure leaves clues, and see that we came right into a previous level of structure support, and we are currently holding, right? Price went down, we tested that level. RSI may or may not have went oversold depending on your settings, but we can certainly see that we've held. So we put that in the back of our brain for later, and let's work down to a lower time frame to get a little bit of a zoomed in view. And you can see kind of a different look at the consolidation. You can see the market went down, then up, then down, then up, then down again, and we're working halfway back up, and we don't really know what to do with this. Well, this is actually forming a classic reversal pattern called a head and shoulders pattern. I like to call it a complex reversal pattern. So we see reversals in many different ways. We see reversals that are V bottoms, kind of like this, where we just go straight down and straight back up. We see like double bottoms where we kind of get this W shape. And then we get head and shoulders, which just pretty much adds a different leg to it. And I'll draw it out for you. We start off with a clear directional move, right? Swing high to swing low. We can pretty much call this a clear directional move. If not, you have your eyes washed out. We then get a little bit of a retracement, right? This is common in a bearish trend. We then get an extension down, which is also common in a bearish trend. But the clue here, right? The small clue that you can notice here is that the extension, this most recent extension, is very small in comparison to the previous extension, which was very large. And that is a sign of a potential slowdown in trend. We can also add that, right? Take the thing I told you to put in the back of your brain, take it out for a little bit, to the fact that we are currently at previous structure. I feel like Shakespeare here. Thou shalt look left, structure leave thy clue, right? That's, hope that sounds, that's stupid, but I'll leave it in because I don't feel like editing this thing. Right? It's a sign of a slowing down trend at a place where we would expect a trend to slow down. We then get a deep retracement, which is a negative sign for a strong bullish trend. So you see how we're kind of gathering all these negative signs versus very minimal positive signs for a trend, for a bearish trend, I should say. And then we have this move right here, which if this does become a head and shoulders, this will be a failed extension. Now, what we're looking for to solidify, to validate our head and shoulders pattern is this. You can certainly be aggressive right here. There are different techniques and strategies for doing so. This particular opportunity doesn't meet what we would call the Cody special, where you want to be aggressive, but to each his own. What you're looking for is validation, and validation comes in the form of a violation of the neckline. Now, the neckline is going to be this little slanted line right here, right? Left shoulder, head, right shoulder. This is the neckline. Now, there are two ways of doing it. We can connect the dots and draw it like a trend line. If you are someone that believes in trend lines. I am not a trend line person personally, so I like looking at horizontal support and resistance. So I'm going to draw my neckline like this. So depending on how you have it, what you'll need is, again, either a violation, a break and close above, as we spoke about in a previous video, of either this level or this level. And if that does happen, we can project the market should continue bullishly, I would say at least to this level right here, probably 93s there's a great shot of going to, but we can kind of dig back into this later in the week and get more specific with the profit target details. Now, before we hop into more analysis, got a really cool podcast episode coming out soon, if not now. Go check now. I may have released it early on your favorite podcasting app called Where and How to Find the Real Holy Grail of Trading. So make sure you check that out. It's not a video episode, so it's only available on the audio platforms, but I did release that a little early. Maybe if you want to go check it out. It's a really good episode talking about how technicals are great, but there's something else that's going to help you find success as a trader. I'm not going to spoil it. All right, next pair. Let's go into The Aussie dollar here. Aussie dollar is interesting as well. If we take a look at the daily chart, this is my personal higher time frame. That's why I always start there. You don't have to do it, but you can if you want, right? You follow whatever your natural kind of timeline deal is. But mine is the daily. So we can see that we've had a V reversal, right? Price action has come out of this previous level of consolidation. I'll actually draw it on instead of just hovering my mouse. This is bad, but this previous level of consolidation, we shot all the way down, and then we shot all the way back up, bloop, right? There may or may not have been some important news that has been happening in the market over the last month or so, right? Who knows? The point is we've come right back up into our previous level of structure resistance, right? Many of you guys that follow me, you know this as the elephant zone, right? I said I was gonna stop doing that, sorry. What we want to do is we want to look at the consolidation zone before that, and obviously we're right in that level. It's a large zone, but you can see we're right in that level. So let's also go down to the lower time frames for more clues, and I'm going to go down to the 4 hour once again. And we can see on the 4 hour chart, we're getting something very interesting, right? So this type of pattern, we like to call it one of two things, either a loss of momentum pattern or a deceleration pattern, right? Pretty much what you're seeing here is that price action comes in a steep bullish run, and then we're still going bullishly. Yes, so we're still continuing in the bullish direction trend-wise, but it's kind of choppy, sloppy, and the slope is a lot, what's the opposite of steeper? Much more gradual than it was previously, and that's typically a sign of loss of momentum. Now, usually when we see that, we want to team that with RSI divergence, right? So price action should be doing something like this, right? For you guys that attended the divergence lesson, and our RSI, or my RSI, whatever your indicator or oscillator of choice is, should be doing the opposite. So higher highs boop, 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 on our price chart, lower highs on our indicator. That is called RSI divergence, regular divergence. That would be a good clue that we're likely to see some relief, a bearish move. However, if you look at your chart, we do not have that, right? So we're not getting that clue that lines up. But what we may have is that sneaky little new RSI thing that we've been looking for. It's not officially labeled right now. We've been calling it the neck breaker. Don't ask about that why. The other name was too difficult. But we can look for that to see if we can maybe find a clue for if and when we are likely to see some relief from this setup. So what I'm going to do is I'm going to enlarge my RSI because I don't really need the price chart for this, believe it or not. I'm going to enlarge my RSI and I'll tell you what we're looking for. Now, I apologize if you're a tier 1 trader and you've been in a live room, you know exactly what we're looking for. If you're new on YouTube, this is going to be maybe a little weird if you're not familiar with the RSI, but I want to try to keep it as simple as possible because I like simplified videos. That way it doesn't go over your head and you get discouraged. But here's what I would like to see. I would like to see our RSI travel down, violate this low, right? So take that out. This little white thing is my RSI. We would then want to see a retracement, and then I'd like to see this low taken out as well. And if that can happen, right, then theoretically, right, and this is something we're working on. We haven't done the testing or dived into it any deeper. I'm kind of in my year-long real-time testing phase of it. But the theory, at least, is if we see this, then that should be a good sign that we are going to see the relief that we expected up there. So short and sweet this week. Speaking of shorts, I got an awesome shorts page here on the YouTube channel. Lots and lots of videos uploaded daily just for you guys. So check it out and make it a regular part of your trading routine. If you're new, subscribe to the channel. That way you don't miss my newest content. And if you feel like I deserve it, leave me a like or a nice comment. It makes me feel good. All right, until next time, plan your trade, trade your plan. Take care. Go Everton! What a goal! Ending the game. Take that, Forest. Woo!
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.